Good day, everyone. How is everyone doing today? My name is John Eliades, and I'm a success business strategist and owner and founder of the IE International Group of Companies. So what I want to ask you today is, a lot of times I go in and I discuss people's financial statements. And when I get to the topic that you've got to pay so much tax, right? Let's say the guy has to pay R1 million tax. And he is not doing so well with cash flow. He gets very upset in the sense that, where is the money? That's the question you ask. If I made that profit, where is the money that I must pay the tax authorities? And so today I want to show you something that happens in financial statements. Now, there's two ways you can do your financial statements. Okay? There is the cash basis and there is the accrual basis. Now, when you do a set of financial statements, you have to comply with certain regulations. And the regulations is IFRS, International Financial Reporting Standards, or GAAP, General Accepted Accounting Practice, for that region, for that country. Okay? But 99% of all regulations speak about you've got to do the financial statements according to the accrual system. So what is the accrual system? So how do you work out tax? First of all, there must be income, right? There must be income. So it's called income tax. It's called income tax. And there must be expenses. So you are allowed to take your income, less your expenses, and then you're going to get to a net profit. You're going to get to a net profit if there is tax. Now, depending on what vehicle you are using, is it a company, is it a trust, is it a sole proprietor, depending what you're using, there will be a tax rate. There will be a tax rate. Now, most people think you take the profit and you times it by whatever the tax rate is, right? Whatever the tax rate is. They think you times this amount by the tax rate. But it doesn't really work that way. Because there are certain calculations, there are certain regulations on how to set up financial statements, and there are certain regulations that the Tax Act allows you. So you have to do a reconciliation between what is your accounting profit and what is your tax profit. So usually, let's just say you go buy a motor vehicle, and your motor vehicles, because you don't do much kilometers, your motor vehicle will last you 7 years, 8 years. But SARS will say you need to depreciate the motor vehicle within 5 years. Now, there is a difference between the tax deduction according to accounting standards, and there's a difference between the deduction according to SARS, according to the tax authorities. And the difference between the accounting tax deduction and the tax deduction according to the tax authorities, that's called deferred tax. That is called deferred tax. But forget that now. I want to speak to you guys about accrued income. So what they are saying is, what was the income that you incurred within a period? Now remember, this is called the income statement, right? This is called the income statement. And the income statement is for a period, and usually that period is 12 months. Okay? It's usually 12 months. So what they're saying is, what is your income for the 12 months starting from March, ending in February? What is your income for that period? And the same thing they're asking, what is your expenses for that period? Now, when you get to an accrued principle, it is stating, let's just say you had rent of 1,000 Rand a month. 1,000 Rand a month. If you had rent for 1,000 Rand a month and there were 12 months, you would imagine that the expense rent would be 12,000 Rand. But what happens if you only paid 6,000? You were 6 months behind in your rent. Now, the normal person will say that the expense was 6,000. No, that's on the cash basis. That means I only paid out 6,000 Rand, but your real rent was 12,000 Rand. So do you understand, if I had put 6,000 Rand in this income statement, right, then your financial statements would be wrong, because it's going to say 6,000. No, that is what you paid. That is what you paid. And what you paid is not a tax deduction. The cost you incurred becomes a tax deduction. So, how would you do that? You would say, listen, we work with debits and credits. So you would say, I then incurred an expense. I debited the expense, right, of 12,000 Rand. And I credited my liabilities of 12,000 Rand. That means I still owe 12,000 Rand. Do you guys get that, right? I still owe 12,000 Rand. Okay, so we debited the expense, and the expense was rent, and we credited a liability because we owe the landlord the money. But what did we pay? We only paid the bank. We went and we debited the liability with 6,000 Rand, and we credited our bank account with 6,000 Rand. Therefore, if you look at these two, there is still 6,000 Rand owed to the landlord. But the full deduction, the 12,000 Rand, that full deduction is allowed for tax purposes because we're using the accrual system, okay? As per the income statement, or the comprehensive income statement, as the new name is. You can see when did I study. But, so you guys need to understand. But the same thing happens with income. What happens if a guy pays you a deposit? He pays you a deposit. Now, is that income? But you haven't delivered the goods and services. So therefore, that is an accrued income. The income still hasn't come. So therefore, you will not recognize that income in your income statement. But SARS might recognize it, because they say the sooner of income, cash payment or invoice. But in accounting terms, what we do is we then say the guy paid a deposit and we haven't provided the services to him. So that means we owe him either his money back, or we owe him the goods or services that we have promised. But it is not yet an income. So it becomes an accrued income, and we do not put it in that financial year. Does that make sense? And what happens if I invoice the reverse? I invoiced, but I haven't received the money. Now I went and I invoiced 112,000. I invoiced 112,000. So I had a 12,000 expense. I invoiced. Therefore, my net profit was 100,000. Therefore, I've got to pay 28%. If it's a tax rate of 28%, I must pay 28,000 Rand tax. But do I have the money to pay the tax man? No, because I have not received the 112,000. Now, not only if you registered for VAT, you have to pay that VAT over. And if when your tax closes, when your financial statements closes, you're going to have to pay that 28,000 Rand. So when the client says, you're saying I made 100,000 Rand profit, but where is the money? He's referring to the cash basis. I've not yet received the cash, so how can you expect me to pay the tax over? Well, tax is not fair. Tax is not fair. People have this thing in their mind that tax must be fair. Tax is not fair. Tax is there for the government to generate income. Okay? And the government needs to collect the income. So what happens is you pay your 28%. When you get paid, you can use the full 112,000 Rand because you've already paid your tax on that money. Now, there's one more thing I just want to say to you is there's something called an assessed loss. So if your companies have been making an assessed loss, then you can take your assessed loss minus your profit and you can decrease your taxable amount. So you guys need to understand the difference on accrual and the cash basis. If you're thinking, I have to pay tax, but I don't have the money, it is because you don't understand those two concepts. Sometimes people say to me, I don't understand how I must pay tax. I went and I borrowed the money and I've been paying 50,000 Rand a month back on the loan. But what people don't get it, the capital portion of the loan is not a tax deduction. It is not a tax deduction. Only the interest portion on the loan is a tax deduction. So if you went and you paid 50,000 per month times 6, you went and paid 600,000 Rand back on the loan, but that loan, 600,000 Rand, only had 50,000 Rand interest. Only the 50,000 Rand becomes a tax deduction. So you're thinking based on the cash basis again that I had an expense of 600,000. Yes, according to the cash flow process, you did have an expense. You had an outflow of cash. Okay? But according to the tax man, you can only claim the interest. And also for accounting purposes, you can only claim the interest as an expense in order to generate a profit or loss. So guys, understand the difference between the accrual system and the cash-based system, and understand where your money is based on financial statement terms and based on cash flow terms and based on management accounts, because sometimes you structure your management accounts in order to use them to run your business, because you've got to know your numbers every single month. And certain people adjust their management accounts in order to make better decisions to adapt to their business. But IFRS and GAAP has got its own rules. As chartered accountants, we need to keep to those rules, and the tax authorities have their own rules, and in order to submit a tax return, we need to comply with their rules. You always got to know your numbers if you want to be in the game of business, because this is the language of business. Thank you guys very much. This is Johnny Eliades, your success strategist, and I will see you at the top. If you guys want any help from us, please don't hesitate to go to our website, www.ieint.com. Thank you. Cheers. Bye.